Welcome to Caching Waves. This is an Elliott wave update for Bitcoin. In this video, I'm going to be talking about the micro time frames as well as my primary count and some alternatives and my plan to navigate this area. So let's get into the daily count. Quick recap, and that is since the low at 15,476, we had a wave 1, 2, 3, 4 potentially complete, looking for 5 waves up for our 5th wave. Now that target has changed since previous videos, and that is as labeled. If the 4th holds, my expectation for a 5th wave is 98,151. How I got that target is extended the length of wave 1 off of the low of wave 4 as labeled currently. So if we drop for one more low, this target would change again from that pivot. Okay, so expectations for a regular Elliott wave, just to show you how this is mapped out. Take the length of wave 1, extend that off of wave 2. You look for the 1.618 extension for our first target. We came up a little bit shy of that, which can mean two different things. This could actually be a corrective move, or the possibility is open to get a extended 5th wave, where that target is actually just our 1-2. So we're not going to know until the waves start to fill out, but I am very aware of the bearish scenario and the bullish scenario. Okay, I've talked about this many times as well. As for your pitchfork, usually for a wave 4, you look between the 236 and the 382 is ideal for your 4th wave. So you take the length of this wave 3, put on your fib retracement tool and your pitchfork from the beginning of wave 1 off of wave 2. And you usually want your pivot from the top end of that channel. So we are looking for the pivot from there. Now the second area you would look for is the middle of the channel, of the pitchfork channel. So we'll see if this area holds, and all a modified pitchfork, which is why I was calling it a channel, is just a channel. That's all a modified pitchfork is. They're much more helpful than regular channels. Okay, so let's assume this low holds. What I did, just to give you a gauge, it's not a rule or anything like that, is I took the length of wave 1 in time, extended that off of this wave 4 as labeled in time, and extended that out 100%, which would take us to December 26th, 27th, December 27th. So we'll see if we end up pivoting up in this area. That actually reminds me of that bull market back here. That was, yeah, about the same time in December as well. By the way, that's when I first got into Bitcoin, back here in July of 2017. Excuse me. I got my first Bitcoin around 1800 back then. Rode this all the way up, made the most money I ever have in my life, and then concluded to lose like 70% of it down to here. Didn't know what I was doing, and this is where I got into Elliott wave. That's a little story. July of 2017, I remember that very clearly. Rode that all the way up, altcoins, everything, and then lost gained the most money I ever have, and then lost about 80% of it. Still came out profitable, but that was quite a learning experience. But anyways, here we are many years later. Okay, so a couple things to look at here. You can see we came right between the 236, 382, as well as our middle of our pitchfork there, which is good. Now, on this chart from Binance, we did not overlap this wave 4 with the wave 4 of one lesser degree. So I double checked other exchanges, because last video I wanted to see that. And we did overlap on the CME chart, the wave 4 of one lesser degree. This is a 3-4 of one lesser degree. Usually we want to see at least a price overlap of the wave 4 of 1 lesser degree. I also looked on Coinbase. We also overlapped. So that's another requirement met. So I'm okay with the 4th being complete. Okay, let's look at our counts. So this is my primary that we hold in this area. I do have some alternates, and that is if we happen to come for one more low, there's still the option. I'll try and get this less messy. There is still the option that we can make a 4th and 5th if this ends up being a ABC, as you can see in gray. All an ABC is in this situation is a flat. A 3 with a triangle X, or a B wave, a 3, 3, 5. I still think this is a 5 wave. It just counts so good as a 5 wave. So this is a corrective pattern as a flat in itself. You can see our target also came to the 1-to-1 of C equaling A. So there is the option. I can only count 3 waves out of this as a 3-wave move. So there's still the option of a 4 and 5 here. And targeting for that would probably be the 1.618, since we already came through the 1.236 of this as an A wave. So that would be around 45,579. Now, one thing to note, we've already came through the most likely area for this to be a 4th wave still. We usually want to stay below that 50%, and that was taken from this wave here as a 3rd wave. So the only way I see us coming down as a 4th wave specifically would be if this ends up making some sort of running flat. And that is where we make this is an A wave, lower B wave than the 3rd wave pricing, and our C wave here, and then we get our 5th wave. This would also create quite a bit of divergence in itself. So that's how I would see us coming through a 4th wave, but it is a good sign that we're bullish, that we already came through that 50%. I'm just saying the most likely way if we were to drop would be like a running flat or a triangle, one or the other. But either way, this would need more of a correction, in my opinion, there, because we rarely get wave 4s past the 50%. So it would more likely be an A wave within a larger correction. Okay, so that's how we complete with one more move to the downside. But we'll call it as complete right now in discussions for this video. My alternative for the bearish point of view is that we've topped in a B wave as a WXY. These are very close to 1-to-1 extensions. If you count it this way, we have passed the 90%, stayed between the 90 and the 105% of this A wave. You can see in gray. So there is the possibility this becomes a flat pattern as an ABC. I extended out the 1-to-1 of time of this A off this B wave high. That would take us into April at the 1-to-1, or March. But that could get extended out because usually our C waves have a little bit less of a steepness, right, than our A waves. And in this scenario, this would have to be a diagonal wave 1. Like so. Same flat for our wave 2. We would expect that one more move down for our wave 5. Remember that we can get that one more wave down for that C wave, but this is where it will be the most important if this one more wave down comes out. Do we get an A, B, C, and then we absolutely collapse for our third of the third, or is that the C wave bottom and we actually impulse out of it? You can see it will look very different, just the shape and time of this move. So I'll make sure to update that as we go. But this is my most bearish scenario right here. And our one-to-one extension is down at 16,547. But we're going to have to move between log and linear because linear is between 20,000 and we only have to hit the 618. So it's going to be reliance a lot on the fib pulls from these once we have more reliable fib pulls for targeting. Okay, so let's go down to the micro time frames. I'm still not convinced we have found a bottom. I'm going to explain how this is most likely to turn. So that was our probability shift for that fourth wave. And at 61,126, I think I got to go with linear actually, 62,027, that's where I would say we're more likely to go to the upside than the downside once we pass the 618 retracement of the entire move to the downside. Okay. So, in this situation, we're looking for either a bottom in, that's what I'm looking for. Our bottom in as an ABC, so this becomes a WXY on the larger trend, or looking for another 4 or 5 down, right? Now, looking at this, it does look a lot like a diagonal where we have our, let's just do this in real time, ABC. This looks like WXY. We've got to change that out. ABC, X, ABC. Yeah, most likely WXY. Double zigzag and another ABC. Which creates our 1, 2, 3, 4, 5. So it looks like a potential wave 1 complete as a diagonal. I'll put that in green. See how our trend lines are. Yeah, pretty good. Usually like to see a little bit of thrust on the fifth wave, but that qualifies. Let me double check our measurements. You know, I look for the 618 to the 786 for our third wave. The length of our wave 1 off of our wave 2, look between the 618 and the 786 usually, if we get a lighter retracement, which it looks like we have there. So beginning of wave 1 off of wave 2, 1 off of wave 2. There's our zone for our third, perfect. Well, and clearly our fifth wave is not the shortest. It looks like it actually came up a little bit shy of that 618. Yep. But follows all the rules and guidelines. Third wave is not the shortest. Hits the zone I like to see for my third wave. So this can be a wave 1, 2, 3, 4, 5 to the upside. Put that in blue. I'm going to put those all in a category. Micro impulse. Okay, so we'll take our Fibonacci pull. Looking between the 382 and the 786. That's the zone we want to be in. The 382 and the 618 is the ideal zone. Last case down past the 786, right? And we're looking for an ABC correction. I'm also going to put on our time fib. I don't do this every time, but just so I can show you guys the idea. 30% minimum in time, 618 to the 1-to-1 is ideal area we look for. Get rid of the background. So there is our ideal zone, 382 to the 618. But we can just come to the 30%. Sometimes these sell off what look like pretty quickly and recover pretty quickly. Okay, so I'm going to explain the bearish scenario here, and I'm going to play it a very specific way. I'm not currently in this. Because the problem with diagonals is they also mimic WXYs. And I'll show you how that works. We have an ABC. Remember, this is a 3-wave move. We can put on our fib tool for our B zone. And it can actually come all the way up here. So whichever way you label this, this would be a WXY or a WXYXZ. Probably like this, and this looks like a diagonal. 1, 2, 3, 4, 5. You can see you can label this as an ABC as well. 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. So that's why I'm always hesitant with diagonals, even though they look good. This is also potentially quite bearish, right? And this could all be an A wave in a flat if we start to sell off very aggressively. This just becomes an A for a 3-wave move down, B, C. And we put on our retracement tool. B zone, right on the pivot. Yep. B zone extended out. So we can very easily make this ABC. 335. So we look for a 3-wave move down. And potentially a 5-wave move up. Make our correction, continue on for that 5th wave. So that's why I'm so hesitant about diagonals. Now, knowing these things, there is ways to get in them to get at least probabilities on your side. And how that would be is when you see a 3-wave move, what I tend to do right into the zone I want. Let me show you this. Sorry guys, I gotta go quicker with this video. It's almost 20 minutes. Flat micro. Okay, so going back to this, what I expect is an ABC correction. Simple zigzag. Like so. And what I will do is wait for this, make sure I have a nice clean count, and if we reject in our perfect zone here between the 382 and the 618, and we starting that 3rd wave, I will buy at this B wave break. I will wait for this to happen and buy at the B wave breakout. And my stop will go at this C wave low, or the wave 2. That's how I get in. Then if we just come straight down in 5 waves pretty sharp, I'm never in, right? I get to avoid this whole area. I only get in if I at least the market comes to me. And I guarantee you the risk reward is pretty much the same as just buying in here, stop at this low. So you're not giving up anything, but you're at least getting the market to come to you and you get to see what it's doing, right? Sometimes we get markets that absolutely take off. Say we just get something like this and it doesn't look quite complete, but then we just take off out of here. In that scenario, what I would do is put on, whenever this wave ends, pull it from that pivot. So from the top to that pivot, say it just comes to here. Say it just comes to here. There's an option if this happens and we start coming up to make a flat like this. So what I would do to make sure I get in case we don't make that flat is I would trigger long above this 1.618 of this A wave. And my stop will go at this wave right here. So either way, I get in this trade, right? As long as the market comes to me. And that's how you can avoid bad trades sometimes, especially off of diagonals. All right, guys, I hope that was helpful. Sorry for such a long video, but I think it was needed. Thanks for watching. I'll see you on the next one.